Let's talk about Polaris now. That stock was down about 13.5% on Friday. It's down another 3% in trade today, post its numbers. There was a big slip that we saw in the gross margins of the company as well. The Polaris has also demerged its services and products business, and the products business will be listed separately as Intellect Design Arena. Arun Jain, the chairman and CEO of Polaris Financial Technologies, joins us now. Mr. Jain, good morning. If you could just tell us when the listing of the products, or rather of Intellect Design Arena, will take place, what could the timeline be?
Good morning. First of all, let me just clarify this stock down by 13.5% or 14%, I think is a process step of demerger.
Yes.
And I think as an investor channel, you must communicate it's not down by 13%, but it's because of separation of the two companies.
No, Mr. Jain, we did say that in great detail on Friday, that it was only because...
Today morning also started with the same conversation that it's falling for two successive sessions. And that's why...
No, it's a correction. So it's a correction adjusting to the demerger. Point taken, Mr. Jain. But when will the Intellect Design...
I think it makes a... Because shareholders on 9th of... was ex-Intellect, and that was money at least accounted for the share which the shareholder or investor will be getting in Intellect. And then on 10th was the record date, and then 15th is the date when board will meet, Intellect board will meet and allot the shares of Intellect. And then by 24th of October, we'll be filing our information memorandum in Indian bourses for listing, which will take appropriate time within the SEBI and NSE. So next few weeks it should be listed in stock exchange. So
by the end of the month, you're saying?
We cannot commit a date, but we will filing on 24th of October or on or before 24th October our information memorandum to the stock exchange. So it will take appropriate time, but SEBI or NSE takes to list.
Okay. Can we talk a little more about your services business itself? How do you expect the margins to pan out? Could they continue to remain challenged?
In this call, I think the major point was to have a demerger, kind of a clarification to the stock market, because quarterly results are just around the corner, and I don't want to tread on the path of anything related to the numbers or the margins. So.
I mean, in a longer term, if you can make a comment, say over the next 3-4 months, 3-4 quarters, is that one of the challenges you will tackle?
Yeah, I think what happened with the services business to be being separate and product business being separate, client centricity, which is the reason for which we separated the services business, since it will be vendor agnostic and our services business can choose any product which customer wants to choose, will deepen the relationships. So our investment, which was happening and continuously service business was incurring that losses in their books as far as service business is concerned. It was investment in product business. Last quarter around 13-14 crore was the investment, which depressed the EPS margin of service business. That will no more be there. So that's the one positive side. On investment side, there definitely there will be a investment which will be more client focused rather than a product focus. So this is so I think it will pan out for the investor. I think the improvement in the margin because of the losses will not be borne by the services business, which they were seeing over the last so many quarters, last almost 7-8 years. That will go away. So that's one positive news for the investor. So that margin will be there for the product business. So I'll come to Intellect business separately, but this is what the service business looks like to us.
Okay. Mr. Jain, my apologies, I stand corrected. I thought your results were out already. But if you could just tell us, what could the quantum of investments be that are required for the product business going ahead?
Yes. As I want to, because it's a new company getting formed, so I use this platform to update the investors that there are 4 banking spaces in which growth is happening on the product business. So banks are investing, global banks are investing in a fee-based income products, which is a global transaction banking, and that is a growth business which we are looking for the dollars which are coming up. So a lot of money is coming in digital banking and global transaction banking. So that's a space which we call IGTB business. Then the second business is the Intellect risk and treasury business, where we have a great products in risk area and Basel III areas and treasury areas. That's also the money, new dollars are coming for the investment in the banks. Europe, and the third business and fourth, which is a IGCB, Global Consumer Banking business, as well as insurance business. They are two businesses which are around transforming their legacy platform to the new bank. So in first business, we compete with a company called Fin Tech. Second business, we compete with SunGuard, Mises equivalent. In third space, we compete with the IGCB, which is consumer banking, with Finacle and Temenos.
Okay.
And in Seek, we compete with the insurance player like Guidewire and life claim solution players. So that's spanning out that this is a four business to mitigate the risk of the growth, that two businesses we have kept for, which is new dollars of the investment coming, and two are modernization businesses.
But the products business breaks even in FY15 itself?
If you look at it again, product business metrics need to be recalibrated for, so a lot of Indian companies now coming to product business, and a lot of metrics which is important in a product business is what is my operating margins versus what is my EBITDA margin.
Okay.
Normally in all the software services business, industry is expecting the cost of sales are between 8% to 12%, while in product business the world benchmarks are close to 30% to 25% to 35% are sales and marketing costs. So what we are controlling in product business is that operating margins are over 50%, so it's close to 54-55% are our operating margins, and our sales costs in 14-15 will be close to 30-32% will be the sales cost. So that's the metrics which is there. But our R&D costs are now constant. We are investing 100 crore per year on R&D cost, which is getting stabilized. Some quarters may be higher than 25, some may be lower than 25, depending on what R&D project we are sanctioning. But on an annualized basis, it's close to 100 crore is the number which we are spending for the R&D cost. So looking at it, as the growth will come in, we will be investing into sales and marketing, and if dollars are going to sales and marketing, those are seen differently than the overall business margins.
Can you just give us the absolute figure of what the exact cash division is between the services and the products business?
We have just announced in stock, we have almost divided 50-15 as of 31st March. So 31st March consolidated cash in product business was close to, I don't know like the number, CFO will say 315 crore or 320 crore is the number which was given to product business to start with.
Okay, but then your services business contributed 78%, didn't it? I thought it would, even the cash would be divided accordingly.
Based on the two business needs are there for shareholders. So what the shareholder will get more benefited, because service business will churn out the cash predictably in coming months.
All right. I think we leave it at that. Mr. Jain, thank you very much for joining us and giving us your perspective of how the remaining part of the business is going to be listed and what are your plans for that business. Thank you very much for joining us.